Good day, traders. Welcome to Traders Watch, where we analyze the markets and try to possibly look for trade setups using the Elliot wave theory. Okay. So today I have the Canadian dollar Japanese yen chart, and we're going to be analyzing it from the top coming down. Okay, to try and understand the cycles of the price action and the sequence, so that at least we can be able to forecast and anticipate the next move, so that we position ourselves for those moves when they do eventually play out, and at least we can stand to benefit from them. Okay, all right, so let's get right into it. I have with me here the monthly chart for the Canadian dollar JPY. And what I see here is what appears to be a zigzag from around the lows of around 1994. From these lows up to this peak, the market has gone up in what appears to be three waves, 1, 2, 3, okay, in a yellow degree. And then it has come down again in what appears to be three waves coming down, 1, 2, 3, right? And we have also this zigzag here as a connector. Okay. Now it has made another 1, 2, 3 waves coming down and another connector as well. So what is the forecast from the current levels? What is the cycle? What is the nature of the cycle? And what is the nature of the sequence? Okay, so that's what we are exactly going to be looking at today. So someone could say that what we have here is 1, 2, 3. This could be a possible W in the purple degree, right? And we would expect to have an X in 3 waves, which could be your 1, right? 2. Could this be the end of our X? Okay, the sequence does not seem to suggest so. What do we appear to be having? We appear to be having this as one leg, and then it could possibly play out the structure and then completing this degree here with an X in the purple before we can anticipate further bullish move to the upside. Okay, so this structure here, maybe to use the proper cycles and the proper degrees, if this is our W in the purple degree, we are going to have these 1, 2, and 3 in the blue degree. Okay, so internally what you have, this appears to be a 3, 3, 3 corrective structure, and therefore also in the blue degree we have a W, an X, and a Y. Okay, we can go further down to the yellow degree and count these 3 waves here, 1, 2, 3 in W, which is an A, B, C corrective structure. Okay, and then we have these 3 waves here, which is a 3, 3, and a 5. So this is also an A, B, C corrective structure, right? Now, in this leg here, we have what appears to be 1, possible 2, and then a 3, okay? So let's look at the internal cycles of our Y leg, which is completing the X leg, so that we may be able to position ourselves for a trade. Okay, so if we look under the yellow degree, in the red degree, we have what appears to have been 1, 2, 3 waves to the downside, and we have our 1, 2, 3 connector here. The expectations from these current price market levels, I would expect the market to give us another 1, 2, 3 waves coming down to complete the Y leg and the blue degree, which completes the X leg in a purple degree. Okay. So this here, this 1, 2, 3 appears to have been an A, B, C corrective structure, right? And this 1, 2, 3 appears to have been a W, X, Y corrective structure. Sorry, rather. A, B, C, yes, W, X, and Y. We can have possibly an ABC corrective structure or a WXY corrective structure. It doesn't matter. But if we are anticipating this leg here, it means we can position ourselves for a trade to the downside at the end of this Y leg here. So we only need to do the internal count of a Y leg to see if it is anywhere near completion. Okay, because we know that as soon as the market finishes playing out this Y leg, then we should expect a huge drop to the downside. Okay, guys, so this is on the monthly time frame. This is on the 1 month time frame. Okay, this is an amazing, a crazy number of pips. Okay, so let's zoom in and see what we have here playing out at these current market levels. All right, so I'm gonna go to the weekly just to zoom in to that move there to the upside and see where we are with the current degree. Okay, so this is the move that we want. Perhaps we should view it on the 4 hourly time frame. Okay, perhaps the daily. All right. So this is that move we were talking about there. If you can see, the market has is playing out this nice correction here, right? And we say that at the completion of this leg here, we're going to expect another move completing that yellow degree, okay? And what do we appear, what do we seem to be having at current price levels? Okay, if we see, this appears to be quite very impulsive. All right, so in the green degree, we have here what appears to have been 1, 2, 3 waves going up, and then we have also we have 1, 2, and 3 waves coming down. So this would be a W in the red degree, sorry. This is a W in the red, and X and a Y. Let me use the proper degree there. This would be a W in the red, an X in red, and a Y in the red degree. Okay, and internally, this appears to be very impulsive, a correction, and then an impulse. So it's a 5-3-5 structure. Therefore, it's an A, B, C internally. And also, this appears to have been 3-3-3 structure. So this is a W, an X, and a Y in the green degree. Now, what we have here, so since we are expecting a WXY, our Y leg should also be 3 waves. And looking at how the market has already been playing out so far, I see here what appears to be a flat correction. Okay. Let's count. So we have 1, 2, 1 possible 1, 2, 3, 4, and a 5. completing. So if this was our wave 1, this would be our wave 2. Possibly our wave 3 has ended here. So we are most likely going to have a wave 4 in 3 waves like that. A wave 4 somewhere here around these levels. And then we can expect to have a wave 5 to complete this WXY correction. And then around these levels, we are going to look for the market to drop and give us this huge, massive move to the downside. Okay, so currently no setups as yet at current levels. We are just going to watch the market for this wave 4 here. And when this wave 4 completes, then we can start to be looking to buy into this wave 5. And then after the completion of wave 5, we can then look to sell the pair for a huge drop to the downside. Okay. So this is what I have here. No setups currently. Currently no setups on CAD yen. But like we said, our wave 3, I propose it has ended around these levels here. This is where we have our wave 3, and all of these, I see it as a correction, okay? A possible expanding flat correction before we expect that move to the downside. Okay, so short-term traders, we can even take advantage of this small move. All right, so we would want to get deeper into this correction and see what we are having here. This appears to have been 1, 2, 3 waves, an A, B, C corrective structure. And this appears to have been 1, 2, 3, 4, and 5 waves. Okay, so this was pretty impulsive. 1, 2, 3 in the Y degree, 4, and 5, right? Followed by 3 waves. We can also expect to have this can be a 3 or a 5, right? But already this structure here, this correction that is playing out in the green degree is an A, B, C corrective structure. So we are currently in this C leg. So for those of you who understand Elliot wave principles, the C leg and the wave 3 are very profitable legs to be trading. So we can still trade this leg to the downside. Okay, the only problem is we are not going to know if it is going to be a running flat, a regular flat, or an expanding flat. Okay, but after this move here, this strong move to the downside, I would expect the market to give us another huge drop, at least up to equal legs of this one. If we pull our fib extensions, from the start of the leg, from the start of the wave C to there and to the end there. Okay, so I would typically expect the market to come and trade around this area here. Okay, before a reversal to the upside. All right, now if we are to measure the number of pips, if you are to take that trade there, this could be about 398 pips, which is not a bad trade at all. It's not a bad trade at all. Right? So let's zoom into the 4 hourly and see if there are any trades that we can be taking. Okay. Now, this is the end of that expanding flat that we just spoke about, right? Let me use yellow subminute degree. 1, 2, 3, those 3 waves are clear now on the 4-hourly chart. Okay, and now the market seems to have given us 1, 2, 3 coming down, and then another 1, 2, 3 going up. So we can expect this to be another 1, 2, 3 waves, right? If you are to be taking this trade here, you could place your entry right at this current price level, but this should be your invalidating point. I wouldn't expect the market to come and trade above that point there. All right. So in this case, let's just safely put our stop loss at this point here. Okay, so right at the 91.649 price level, that's where we're gonna put our stop loss. And this is 103 pips, okay? So it might be better it would have been better if we had been able to take this trade from these current levels here. Or let's see what kind of structure is playing out in the 1-hourly time frame. Okay, so the market also appears to have, so this would be a more profitable trade in the 1-hourly time frame. It's one of those trades which, if you had missed it from the top here, if you missed it from this correction here, this correction there, if you missed it from that level, okay, it becomes very expensive to jump into the trade at the current levels, okay, because this was going to be a very nice trade. You would have entered here and put your stop loss just a few pips above the blue box right at this level here, but you can still jump into the trade. We have what appears to be an expanding flat here, okay, so my expectations will be for this move to play out here. We have one leg to the downside and expanding flat. I would expect to see another leg to the downside, at least to come and take these lows before we can have any correction, and then more downside. Okay, and the invalidation level would be exactly at 91.00. Okay, now that's a better risk to reward ratio. I'm personally not going to take this trade. This is 41 pips of your stop loss. Your stop has to be right exactly above at this spike here. Okay. I'm personally not going to be trading this. I would rather wait for the market to complete this leg first. I would rather wait for the market to first complete this leg here. Right, because this is just going to be a short-term sell while we're completing that correction. Remember, this is our wave 3, so we're waiting for F4 and F5. I would rather wait until the completion of wave 4, then I can trade this to the upside up to the end of wave 5 before looking for a reversal to the downside. Now, this is going to be one of the money trades. Okay. That's all I had for you today, guys. If you like what we do, please click the like button, share, and subscribe. Okay, until next time, please trade responsibly.